The German government is considering plans to extend a massive lifeline to ailing power company Siemens Energy. A potential 16 billion euros in loan guarantees is on the table, aimed at enabling the company to meet a massive backlog in deliveries at its Gamesa wind turbine division. The company, a spin-off of former parent Siemens, has faced significant repair bills due to flaws discovered in its turbines. High borrowing rates, increasing the cost of construction, have added to its woes. Let's bring in Clemens Fuest, president of the Ifo Research Institute and a critic of plans for the German government to rescue Siemens Energy. Mr. Fuest, why do you think this is such a bad idea?
Well, it's a very bad idea because it is primarily the responsibility of Siemens Energy, its banks, maybe also its parent Siemens, to finance these guarantees, and certainly not of the government. The trouble is when companies have issues, have difficulties, they turn to the government, and when they make profits, they privatize those profits. That is unfair, and it also sets the wrong incentives for management, inviting them to act in a very risky way. So there's no reason why the taxpayer should help Siemens Energy in this situation. The banks can do that. The parent company can and should do it.
What about the idea of a level playing field, though? Siemens is facing competitions from China, which provides massive subsidies to its renewables companies. Surely letting the company languish is in nobody's interest, including that of the German people.
Well, there are ways to deal with foreign subsidies if they are unfair. The WTO allows countries to levy import tariffs. So if the EU thinks wind turbines from China are subsidized in an unfair manner, it can raise tariffs. Here, this is not so much about competition being too tough. This is about a big order log, in fact, the company has, where it needs financing to process that order log. And it seems that banks and the parent company don't want to finance this because they are concerned about mismanagement in the subsidiary Gamesa, the Siemens Energy subsidiary Gamesa. And it is not the taxpayer's job to pay for management errors. So this is not so much about Chinese competition, it's about management errors at Siemens Energy. And they should fix these things on their own.
I want to talk about those management errors, though, because Gamesa has a huge backlog of orders. What has gone wrong here?
Yes, with a large backlog of orders, it is important to have enough financing to get those orders going, to process those orders. And it's standard to deal with this. It's a management question to make sure. How do you make sure if you take on orders, how do you make sure you have the financing to actually carry out and process these orders? And for that, you need to talk to your clients, you need to talk to your banks. It's a standard management job. That went wrong. And now Siemens Energy turns to the government. That's really unfair. They should fix it on their own.
But there are external factors when it comes to financing. High borrowing rates have made construction much more expensive.
Absolutely. And it is the job of management to adjust to those high interest rates. Maybe take on fewer orders, maybe focus on the most profitable orders, something like that. But it's certainly not, I mean, the response to high interest rates is not to get the money from the government. The high interest rates set by the central banks are a signal, maybe not to carry out all investment projects, but to put to the side some, the less profitable ones. And that's exactly what the management should do.
I think it's fair to say, though, that Siemens Energy is not alone here, though. Swedish company Vattenfall has halted work on an offshore wind farm off the Norfolk coast. There's Danish wind farm giant Ørsted. It's also run into problems in the US. Doesn't this point to a wider problem in the renewable sector?
It certainly poses to the fact that we do have rising interest rates at the moment, and we have them because we have inflation, and the natural reaction to inflation is to halt some projects. It may very well be that the renewable sector has particular issues, but it's not the task of the German government to fix those issues by giving guarantees to Siemens Energy. If there are issues like slow planning procedures, those should be fixed. But the answer to those problems is not giving money to Siemens Energy to correct or to fix management problems.
If Siemens Energy were to write off its Gamesa unit, though, what would that mean for Germany's energy security, as well as its ability to meet its clean energy targets?
The clean energy targets can also be met by buying wind turbines from other suppliers. There are many, as you said, there are many suppliers in the world. We can very well import wind turbines. We don't depend on Siemens Energy. And if Siemens Energy gets into difficulties, has to shrink a little bit, this doesn't mean its production stops. Maybe someone else will take over some of that production. There is large demand for wind turbines in the world as a whole. And on top of that, wind turbines are not like key drugs, very important drugs you need in an emergency. If for 2 or 3 months you are cut off from wind turbine imports, that's not a big problem. So the security issues are not as large as with critical drugs or with, let's say, gas. So security arguments are not applicable easily to the wind turbine business.
If we look at the bigger picture, then the German economy as a whole is not doing very well. The latest data is far from promising. GDP shrunk in the last quarter. How worried are you about the health of Europe's largest economy?
Germany faces short-term issues like high interest rates, high energy prices, and so on. But on top of that, Germany faces some structural questions. What is the future of its energy-intensive industry? What is the future of its car industry? These structural issues weigh on the German economy and explain why it is performing worse than other comparable economies. And what the government needs to do in this situation is push for reforms that improve energy supply, that reduce bureaucratic and tax burdens, reform that allow for more infrastructure investment. So we need a growth agenda in Germany, a broad growth agenda to address these issues.
Clemens Fuest, president of the Ifo Research Institute, thank you very much.
Thank you.